Hi there, Serial Trader here. It's been a little while, but I'll do a update here on the major US indices and starting off with SPX. From my last video, I was basically seeing some sort of triangle that implied a move up to new highs, and that certainly seems to be how we're resolving here so far. Now I've made a little bit of a change to the way I labeled the triangle the last time, just to make the subdivisions of the triangle a little more proportional as far as how much time they consumed and how much price range they moved. But that doesn't really change the overall outlook of higher prices, which again we're certainly working towards currently. All right, so what I've done here is just as far as an upward target, and to do a triangle thrust measurement, basically you have your BD trend line, your AC trend line, and then you extend those back out to the origin of the triangle, which is obviously here where we first started this initial A wave down as it's labeled. So these two trend lines extend out to that point. Just taking the vertical measurement of that and projecting off of the E wave termination point and projecting that upwards. That would give us a triangle thrust measurement for a target of around, let's say around 3,200 plus or minus. So that's a nice round number on the SPX, 3,200. Right now we're at 3,120. There's certainly no current signs of any kind of pullback developing. So to go up another 80 points from here before having some sort of setback doesn't seem all that far-fetched. Okay, so that's kind of our, if you want to call it the technical target here, just using this chart pattern. So we'll see if that develops. Now, as far as a trade, if you're not already long in some way here, it's certainly not a good place to put on a fresh long, because I mean, where do you define your risk against? Do you define your risk against this? So down here at 28.55. I mean, that's way too loose of a stop to try and capture, maybe another 80 points of upside or so. So if you're not already long and managing a trade that you got in earlier on, certainly not a time for a fresh long. What I would wait for is let this upward move complete, wait for the inevitable correction or pullback, setback, however it forms. And if we do get a nice high confidence corrective looking decline, a nice familiar looking pattern, that'll present another long entry opportunity. Or if we do get a sharp impulsive decline, something that looks like a possible trend change in reversal, well, you'd wait for that to happen. Say you got a nice strong 5-wave decline, took out multiple support levels on the way down, and then you'd want to see some sort of corrective 3-wave correction or retracement upwards. Ideally, the deeper the retracement, the better, to try and get a nice tight stop, and then potentially try and put on a bearish position. But that's getting way ahead of ourselves. For now, still looks like it's going to go higher here. Again, potential target area just on this, patterns target around 3,200. Let's see what happens. I wouldn't necessarily be looking to short, try and pick a top and short it. Again, I'd be looking to try and most likely play this from the bullish side, wait for a corrective pullback, try and get long again and have a new pattern to define some risk against. Or again, like I said, if you do get a nice strong, reversal, impulsive looking decline, possibly wait for a bounce back up to a lower high to establish a bearish position. But we just don't know yet. So for now, at least in the shorter term, expect some higher prices here. So that's really all I have to look at here as far as the wave pattern. Certainly my premise here is that we just had a large triangle, multi-month triangle, and now we're thrusting out of that, and we have not made a typical target to the upside yet. So certainly short term still looking bullish. Now with that being said, we'll go to the thinkorswim charts here. So just looking at this daily candlestick chart, everything's looking bullish. All moving averages are certainly pointing upwards in a bullish stance there. And one thing that does get my attention, you do have multiple gaps, and even some pretty lower levels here. Let me just change this to a color I like better. So you have a gap down here that would need to go down to 29.48, so right around 29.50 to fill that gap. You also have, let's see, this gap got filled here. So that's the real gap that concerns me, that at some point, you know, pretty much all gaps on SPX get filled. So at some point you will have a pullback to fill this gap, but that doesn't mean it has to happen anytime soon necessarily. Now we do have this kind of euphoric gap here that we did just on Friday, and to fill that gap we'd have to come down and hit 3,098, so just about 3,100. So you can certainly see this gap fill much sooner, and maybe that would present kind of a shorter term long entry, because, you know, say we come down, fill that gap, touch the T line, and start heading back up to 3,200. That might be a decent kind of short term gap fill to position against, but not super interesting for me. I want to see this thing really blow off, make its new highs, stall out, finally have a correction, and then start looking at potential fresh trade up. Fresh trade setup. Okay, so that's basically what I'm seeing here on the daily. Now on the weekly, still looking quite bullish on the weekly here. Now, how many weeks in a row have we been up? So 1, 2, 3, 4, 5, 6. So we've been up 6 weeks in a row. Now that could certainly continue, but it's getting a little heated here in the short term. So it's not unreasonable to expect some sort of short-term pullback, I don't know, within the next few weeks. But again, where's the trade? That's really the biggest question I'm always trying to ask is, okay, you know, here's the analysis, here's the trend, etc. But where's the trade? You know, where's the place where you define risk against? Where's your target? How's the risk-reward ratio? Right now, if you don't already have a position, the question is, where is the trade? Well, it's not there yet. So right now you watch and wait, see what happens, at least as far as SPX itself goes. Okay, so that's that. And we'll go to the Dow Jones Industrial Average. Daily here on the Dow. Very much the same picture, making new lifetime highs on the Dow. We gapped up here in the already, you know, kind of extended condition short term on the gap, so certainly a near term gap fill would not be unreasonable. Another thing to point out, which applies to all the indices, including SPX, so we're in the overbought condition on the oscillator, but when you're actually making new all-time highs, I mean, you can stay overbought for a considerable period of time. It's not exactly a, you know, a time to sell or short just because you're overbought. You can stay overbought for weeks and weeks before you finally have some sort of pullback. But just to mention, it is overbought. And that's, you know, same thing goes for the weekly time frame here on this oscillator, overbought as well. Okay. Well, that's the Dow. And let's see here, we'll go to the Nasdaq Composite. Let's remove some of this stuff. So the Nasdaq was a little bit of a laggard for a while. I think I was pointing that out in my last video. But now that's changed, and the Nasdaq's looking very strong again, making new lifetime highs. And it's exactly the same pattern. You have this A, B, C, D, E. You had a contracting triangle that we're now thrusting out of. And it just doesn't look like it's done yet. So again, where's the trade? If you're not already in on this, there really is no trade that offers a good risk-reward ratio. If you're trying to short here, you're just basically trying to guess the top, and every day it goes against you. You're wrong about that. And if you're trying to go long here, I mean, okay, it could keep going up, but what if you have a little short-term pullback? You can go long tomorrow and say you pull back and fill the gap. Well, that's not going to feel too good. Or if you pull back even more, a little more substantial, say you pull back to the 50-day moving average or even the 20-day moving average, you're not going to feel good about going long up here in this situation. So again, where's the trade? I don't see a fresh trade at the moment. But certainly keep your eyes on it, because I think it will shape up to offer a trade if you're patient. And again, I wouldn't necessarily be looking to try and do a bearish trade. I'd be looking for more of a corrective pullback, unless the market really changes its character. But if it doesn't, look for a corrective pullback to rejoin that larger uptrend that we're certainly in at the moment. Weekly, same idea on the Nasdaq. Multiple weeks higher in a row, and no current signs of that reversing. In fact, here on the Nasdaq, we looked like we did a weekly bullish engulfing candlestick as of last week. So that's certainly not a sell signal. Sign of strength, if anything, despite being in this already kind of extended looking condition. Okay, so that's the composite. Now we'll go to the VIX. And the VIX making pretty much lower lows here. Although we are near the low end of VIX's range. So from a risk-reward standpoint, you know VIX is basically a range-bound entity. And right now we're very near the bottom of its kind of historical range here. So if you want to try and just say, well, I'm not necessarily going to try and short the market or pick a top, but I am going to try and get some long VIX exposure so that when the inevitable pullback happens, you know, you can be confident VIX will have some sort of spike, even if it's just a relatively minor one. If you get in at these low levels and VIX has a little spike, that could be, you know, a decently rewarding opportunity without necessarily having to try and call the exact top on the market and try and short it. It's a little bit different of approach. So maybe VIX calls 1 or 2 months out, or you could go long VIX futures and actually use a reasonably tight stop. Nice thing about that is, you know, VIX only goes so low. VIX doesn't go to 0. So if you're going long VIX futures at 12 or 11 something, and you have your stop at 9, and you might go up to 20 or 15 or 17 on a little spike, you know, that's not a bad little setup on the futures. But again, there's nothing compelling here about VIX having a spike. You just kind of know it's going to happen at some point within the next however many weeks. So there's certainly nothing as far as red flags go on the VIX that would indicate there's any kind of pullback starting yet. But let me get to the VIX VVIX tool, and we'll take a peek at that. So when you're kind of looking for the market to make some sort of you know, pivot peak or pivot high, you know, I look at this VIX VVIX tool. So one thing I am seeing is we're seeing VVIX, so the implied volatility of VIX options. VVIX is making higher lows and higher highs. VIX is making lower lows and lower highs, and SPX is making higher highs and higher lows. So normally VIX and VVIX trend in the same direction. So VVIX would normally, as SPX is making new highs, VIX and VVIX would be making new lows together. But what you're seeing is a divergence there. So you have the VIX VVIX divergence. So part of this you could kind of infer, well, market participants, yeah, they're not buying or piling into SPX puts, which would be represented by the, you know, the VIX essentially is an aggregate reading of implied volatility on SPX options. But what they are doing is perhaps they're starting to pile into VIX options, VIX calls, for instance, in anticipation of a pullback. So that's kind of showing up here on the VVIX, and that's diverging from the VIX. So that's just kind of a sign that, okay, you could be approaching some sort of top here. But again, you'd have to have SPX actually start to decline and VIX start to go up to basically be the next step after this initial divergence. Right now, you just have the first step. You just have the VIX VVIX divergence. You don't have any other of the signs that would point to some sort of pullback coming, but something to watch for. You do have the kind of initial ingredient. For instance, over here, we were still making new lows on VVIX, new lows on VIX, and SPX was, you know, making higher highs. But that's now changed. Now you have that standout there, VVIX not cooperating with the VIX. So that's just kind of a little heads up, at least in the short term, to watch for a potential decline in the market, right? But again, no signs of it happening yet. All right, that's probably a good update here for now. I will do another video coming up right up here on some things I do think are a more actionable setup as far as a trade goes, like in gold and also like in the TLT, the bond index there, or bond ETF. So I'll do a little video on that coming up here right away. All right, Serial Trader signing off.